Right now, without you knowing it, an artificial intelligence is making decisions about your money. Not a bank manager. Not a financial advisor. An AI. It's approving your loans. Detecting your fraud. Managing your investments. And in 2026, it just got given a whole lot more power. For most of history, banking was simple. You walked into a branch. A human looked at your finances. A human made a decision. That world is gone. Over the last decade, banks quietly replaced most of those human decisions with algorithms and software. But what's happening in 2026 is something completely different. Banks aren't just using AI to help humans make decisions anymore. They're giving AI the authority to make decisions on its own. And the scale of what's happening will shock you. Here's what's actually happening inside the world's biggest banks right now. Bank of America's AI assistant called Erica just surpassed 3.2 billion customer interactions. That's more conversations than any human banker has ever had in history. Goldman Sachs is deploying fully autonomous AI agents to handle core trade accounting and client onboarding, replacing entire teams of junior bankers. Lloyds Banking Group announced that in 2026 alone, AI will add £100 million in value to their operations by automating fraud investigations and customer complaints. And the Federal Reserve, the most powerful financial institution in America, just announced it is integrating AI into its daily operations. The AI banking revolution isn't coming. It landed. But here's what nobody is telling you. Only 35% of banks currently have internal policies for ethical AI use. That means nearly 2/3 of financial institutions are deploying AI to make decisions about your money, with no clear rules about how that AI should behave. And the consequences are already showing up. AI loan approval systems have been found to discriminate against minority applicants at higher rates than human bankers. AI fraud detection systems are flagging innocent transactions and freezing accounts with no human to appeal to. And when an AI makes a mistake with your money, who is responsible? The bank says it's the AI. The AI can't be held accountable. And you're left with an empty account and nobody to call. But here's the other side of this story. AI in banking is also doing things that genuinely help ordinary people. NatWest's AI fraud detection cut fraud by 6% across the UK and reduced new account fraud by a staggering 90%. AI-powered loan approvals in Australia are processing applications in minutes instead of weeks, helping people get homes and start businesses faster than ever before. McKinsey estimates AI will add between $200 and $340 billion annually to the global banking industry, savings that could eventually be passed on to customers through lower fees and better rates. The question isn't whether AI should be in banking. It already is. The question is whether the rules around it are strong enough to protect you when something goes wrong. AI is already making decisions about your money, and most people have no idea. If you want to stay ahead of exactly how AI is changing your financial life, subscribe to the AI Effect. New video every week in plain English, no tech degree required. See you next time.